Hi there, traders. This is Brad Gilbert with today's trading action. All right, now the Fed have come and gone, right? Now they've obviously cut rates. In their statement, they did sort of signal that there were more rate cuts coming, and that led to a dollar sell-off immediately. But in the press conference as well, it was obvious that there wasn't any sort of real rush to sort of cut rates. They are focusing on employment. There was mention of that and a few other things like so. You know what? It was a little bit of an overdone situation. If you looked at the charts, you see these massive spikes. It was actually quite orderly. I looked at the shorter time frames, and you can see it sort of just go up very quickly, one or couple, 2 or 3 minutes, and then it came back down probably a little bit longer, but it was all done within an hour. And now this is where everyone's scratching their heads, right? The Fed have come and gone, right? They've cut rates, signaled that they might be doing more. What's the market doing? Well, it's a bit of a repositioning after the Fed. Now we can see like nothing's really changed. And this is the key to me, understanding the markets. Because if I look at the key markets and a reflection of what the Fed are doing, the short dated yields are slightly up. Okay. The long dated stuff, well, that's pretty much trading sideways. So there's no real like shift in the interest rate yields just at the moment, right? So what we are seeing is a risk on day. What that means is equity markets up. Well, we had Euro Sterling Aussie Kiwi going up, and as you can see, there's a bit of discombobulation there. And this is because the market may well be caught long or short Euro, right? So what that means is see how it's just not bouncing at the moment? And a lot of these instruments are overdone, but there's a fair bit of risk involved just at the moment. So what do we need? We need extra data to really make the trading opportunity better for us. And that's what we have today, right? So have a look. I've just adjusted the live trade hub, save us updating it all the time. So you can see today's key macros, right? We've got employment numbers out of Australia. Now, this is key, right? Especially for the Australasian session, probably until we get into the European session. This is going to be the major focus. So you want to be looking at the obviously the Aussie dollar, right? And it looks a little bit sick, right? Just at the moment after this big bit of price. It looks like everyone piled in and got long Aussie on that rally, and now they're about to spit them out. I'm looking for that last little spit and then for that move to go back higher. What will control that? The unemployment figures, right? So just keep a close eye on the economic numbers. As I said, the Aussie numbers are going to be key. You've got the employment change, right? 21,000, 21 and a half, 9.5 to 35 is the number. And the unemployment rate, right? The other part of it, 4.2%. And the rate there, well, the range of the rate, 4.2 to 4.3. These are the numbers that you need to be focusing on right now, right? Check out the Aussie. And as I say that, right, have a look at the Aussie, and I've just widened out the charts here. Aussie Kiwi shooting to the top side. Now, you might think this is a bit overdone up at 112. I can tell you the proper home for Aussie Kiwi is around 125, right? So there's ample room to go up. Aussie Swiss, okay, it's falling against the Swissy a little bit, but not breaking down through levels. This could be a potential target for us. Aussie Yen dancing with the downside as well. Like they're buying Swiss and Yen, right? You can sort of see that. And then what we've seen is Euro Aussie and Sterling Aussie move to the top side, but then sort of pulling back, okay, as Euro and Sterling sort of re-stabilize. Aussie CAD, the two commodity currencies, sort of drifting sideways. So it's not an easy picture to go, you know what, which one am I trading just at the moment? You could be looking at the dollar, but I still think there's a bit of a hangover from the Fed, right? And it's actually really is set up for a move to the downside or a potential ricochet to the top side. The market's waiting for the numbers to work out whether they should be buying or selling at this point. And with the charts and these major currency pairs in limbo, it's a little bit of a tough choice, right? We've got about 45 minutes till the Aussie data comes out. So what I'll be doing is widening out your charts, get the hourly charts up, and you can see just you want to see what's going on technically, right? So if I widen those out a bit, and let me just get Aussie Swiss. Aussie Swiss presents us with an opportunity, definitely on the downside, if we get weaker Aussie numbers, right? And it's sort of mid range, all that sort of stuff. Like a lot of these pairs aren't doing a lot. Aussie CAD is starting to get a little bit oversold. That could be a potential for stronger numbers. Um, so you're generally looking to go with the trend, right? And as I was sort of just showing you there, Euro Aussie and Sterling Aussie have just broken out of the range. Perhaps this is where, you know what, that's a false break, and we get stronger Aussie numbers. Aussie rates are still higher than Euro, so maybe we start to see Euro Aussie go down, Sterling Aussie go down. The fact is, when the Aussie numbers come out, all these crosses do move, right? We're trying to work out which one's the easiest one to get into, and the best one that's trending, right? That's the key to working out the instrument, right? So whether you're in for a short term trade or a trade you're going to hold for a couple of days, that could well be determined by the numbers, right? But one thing, if I just come back to that, and I'll go through the rest of the data as well, because we've got some obviously the Bank of England today. Um, these numbers, so you're looking for confluence with the numbers, right? The unemployment rate. So if we get a stronger number, right, we want to ideally a lower unemployment rate, right? If these are at odds with each other, so for instance, we get stronger employment change and a higher unemployment rate, well, then that's going to discombobulate and make it tricky, right? We saw or not yesterday, the day before was UK employment numbers, pretty much as expected. If it doesn't upset the trend, we're on with a chance, right? The only difficult situation today is when you look at the Aussie, especially against the dollar, is the trend in play? Well, if you have a look at the longer term chart, it is, but we're seeing a lot of noise here at the moment, and we want to make sure we're hitting the right side of the market. I do really think if you are trading, I don't see any change in the US dollar downtrend at the moment, right? This is just the normal noise and mumbo jumbo after the Fed. I think if it once everything the dust settles, I still think there's a little blip to the downside a bit, but with the Aussie, we might start to see it move higher with the overall move. It does look a bit heavy though, so if we do get strong numbers, let's just play it easy because you want to see momentum pick up. You don't want to see it, right, just go up like 10 points and stop, right? Which can happen if the momentum is to the downside, right? Might be worth a little bit of a wait and see. Let that momentum really peter out, and then we're into it, right? So just coming back to the main page now, let's just focus on the main data. We do have the Bank of England, right? The Bank of England rate decision. Now, if I just come back to the main page here, this is the benefit of having something like Metastock. Bank of England poised to slow quantitative tightening, leave rates unchanged, right? That's the market expectation for the Bank of England. So if you're trading sterling around that, you probably want to wait for the statement because there's no rate change. Then keep an eye on that as we go forward. And then as you go down through the North American session, you got the weekly initial jobless claims. Like this used to be a nothing number. It does come into play. And then you've got a whole bunch of Philly Fed manufacturing index, employment, capex. The Philly Fed data is well respected in the North American market. And that's pretty much it. Load of commodity stuff coming out. And that's where we are. So Aussie, for those traders in the Australasian session, take your time. Just understand that there is a bit of downward momentum. We may see some activity, we may not. I wouldn't be going in. I think I'd be trading live on these numbers because we're not expecting massive variance, right? If you come back to the numbers and that Kiwi, so I should have mentioned this earlier. The Kiwi, all the GDP numbers were fallen off one of the Kiwi cliffs. So that doesn't look good for New Zealand, right? That's why the Kiwi's under pressure. I tell you what, if Aussie data comes out strong, the rate and unemployment, Aussie Kiwi could really go for a bigger run, right? That's probably something that, even though it has moved, you probably want to keep an eye on that because they would be factoring in multiple rate cuts just at the moment. And if you can look at the price action, this thing could go to 115 in a day, right? As I said, 125 is its normal home. It's been down around 105, 110 for a number of years, but it never seemed right to me. So maybe this is the correction. Okay, guys, so that's where we are. I mean, as I said, you can trade any of these pairs with stronger or weaker numbers. We're looking for the one that's trending. Obviously, the Kiwi is going up, Aussie Kiwi, I should say. The rest of them, maybe a short-term trade. I still like the look of the Aussie against the US. And you know what? We've got support. I'm just having a look here. Like, we do have, like, this is a big move, right? From 119, 20 or 30 down to 118, the figure. As I said, the market seems to be hanging on with support here on sterling. Now, the problem with sterling, and I don't want to drag this on too much longer, sterling may not bounce today because we do have the Bank of England today, right? They could come out with something weird, no change of rates. So let's just see what happens with sterling. I wouldn't be punting that around just yet. Aussie, definitely the one to be focusing on until Europe, and then let's see what the Bank of England does. All right, so plenty to unpack there, guys. Obviously, I've just tuned up the live trade hub, saves us updating it manually, market overview, and you can sort of click through the various aspects there, see what's going on. Saves you flicking around the various sites, and I did put the upcoming live sessions over to the main page there as well. All right, guys, that's it from me for the moment. I'll see you in the Discord, right? There's plenty to talk about here with regards what's going on in the market. So if you want to keep up to date, check the Discord, keep abreast of the live trade signals. What I would be doing just at the moment is having a look at the instruments, well, like Euro Aussie, right? That's just what I was going to say. The instruments with Aussie in it, Euro Aussie, Sterling Aussie, both bullish, right? Weaker numbers, weaker Aussie numbers, hey, they make sense. All right, guys, have a good one. All the best. Cheerio.